Hello, this is Jacqueline Young speaking to you from beautiful Vancouver, British Columbia, Canada. Welcome to my third video, which is financial planning. I have briefly mentioned and talked about it in my last video, which is the business plan. The financial planning is a very important stage of planning your business planning. It comprises of these important financial statements, which is the income and expenditure statement, the cash flow statement, a breakdown of the initial project startup cost, which is mainly made up of your capital expenditure. For example, the capital expenditure is machinery and equipment, land and buildings, infrastructure, professional fees. These are all allowable capital expenses. So other than that, you should also have the loan amortization schedule and the fixed asset schedule. Now, in preparing the financial statements, the first important statement is the income, the projected income and expenditure statement. And you cannot possibly prepare such a statement without first doing a lot of research and studies about the market, and that is why the marketing plan is essential before you can come up with the costing and the projected selling price. The selling price cannot be determined until you study the market as to how much the product can sell, and the selling price is a determination of your cost plus the margin, the profit that you intend to achieve. And so you can't even establish the selling price until you prepare the homework, done your research on the costing. And so it is so important. The very first figure that you need to establish is the cost of the product. How to determine the cost? It will be your fixed cost that needs to be spent irrespective of the sales quantity, and that would be like the fixed cost, like the land and buildings, the rental, the office expenses, the salaries, and then the variable cost as to how much products will be sold, how much services will be sold. So those are the key foundations before you can prepare a projected revenue and income statement. And if you are in the business of selling products and you're manufacturing these products, it will be a little bit even more complicated, because there will be an inventory. So the amount of inventory that you need to budget based on your estimated sales will determine the inventory will determine your cost of goods sold. I will be covering that in more detail in the training, in the module. So in determining the sales price, other than finding out what is your cost, how much margin you want to establish. You also want to make sure you are not pricing it out of the market. It has to be competitive. You have to determine who are your competitions, what are the other competitive products in the market. So these are all important factors to consider. So as I mentioned, the startup capital expenditure is an important component. Again, there should be a schedule, a statement of breaking down what is the total investment, startup investment you are looking for, and breaking it down to the capital expenditure, which is the biggest component, plus usually at least budget for a year operating expenses before your business take off. So that should make up your initial capital expenses plus operating expenses, your initial startup cost. And I have mentioned you intend to borrow money for this project. So you need to determine how much loan you intend to borrow, how much seed capital you have already raised, and say out of the 10%, 20% or 30% seed capital you already raised from yourself and your existing founders and shareholders. You may be looking for a loan of between 70 to 80%. The more seed capital you have, the easier it is to raise the debt, the loan. And so we need to establish what's the estimated interest rate in the market where you are, the country where you are, and the amortization of the loan and the amortization of the fixed assets to make up the financial projected financial statements. As I mentioned in my previous business plan video, prepare at least 5 years projected income and expenditure to show the income, the expenditure, the net income before amortization, loan interest, and corporate tax. That's what we call the EBITDA, earnings before interest, tax, dividend, and amortization. After that, the bottom line is the net profit. The reader, the potential funder wants to see how attractive is the net profit, how long it will take before break even, that the total investment is being returned before generate true income to the shareholders. So these are the major components of financial plan. I will cover that in detail with financial plan template. So I look forward to see you in my next video, which is show me the money, how to source the funding you require, and eventually do my master class. So until then, take care, stay safe, bye bye.